I think the economy looks very good. I really do. I think the problem I have is I think the financial markets look older than the recovery does. And there's this mismatch between where the markets are and where the economy is today. And I think what we're in the process of doing is trying to readjust values in both the stock and bond market, which might sort of Ponce de Leon, make the markets young again, if you will, and then realign with a recovery that could go on for a few more years, I think.
That's an interesting way of putting it. We've been treading water for most of this year.
Yeah.
And earnings have continued to pick up, though. So are you looking at stocks that are a better valuation and maybe more palliative prices?
Yeah. You know, Becky, we've had market go nowhere here, but and earnings have come up, but the trailing multiple at the January highs was probably 23.5 times earnings in the S&P, and now it's a little over 21. So it's come off, but it's still really high if we're moving the rate environment on the 10-year from 2 to 3 or 3.5, and we're moving the funds rate from 0 to 2.5. I think it's got to come down more like 16, 17 times. Now, if earnings come in at 160 eventually, and the market is about where it is today or a little lower, we're going to get there maybe by the start of next year. Or we could hit an air pocket and get there quick. If we get there and the rates, the 10 years at 3.25 or above, and the multiples 16, 17, there could be a case to be made yet that the recovery goes on for a period, because there are none of the traditional recession indicators out there.
But the other way,
I misspoke. It's palatable, right?
Palatable. Yes,
palatable.
I think that's, we knew where you were going with that.
Palliative is like when
something you're happy
hospice.
to eat. Yeah,
right.
palatable. Yeah.
In Minnesota, I'm not sure I understand that word anyway. So
palliative is just like cream that you put on. It doesn't really do anything but treat the
palliative
symptoms.
means it treats pain.
It treats the symptoms. Yeah, not the.
I was going to say though, Jim, the other way, besides we kind of grow into the valuation, is the markets say, look, the economy's still fine, and parts of the market are going to get bubbly. I mean, didn't we see that in the 90s?
Yeah, and that's some of the problem. I mean, we're seeing that in technology right now. There's I wrote a piece where we've had kind of half a dot-com move, and the year to date, these numbers aren't far off. I think S&P technology stocks, if you put the two that are in consumer discretionary over there, are up about 15%, and the rest of the S&P ex-tech is flat this year. And that performance has been going on and accelerating the divergence for 5 years, which is what happened in the 5 years leading up to .com. And you think about what could win this year. It's really a select group within the S&P 500. Everything else is outperformed, underperformed, never really gone anywhere. Frustratingly, I think. I would like to see values correct, and I'd like to see some degree of gut check to sentiment. I think Main Street's doing so good finally after 8 years that people finally feel like the risk is less, when I kind of think risk is elevating and people don't appreciate that within the financial markets. And we might get a good gut check, and maybe that's going to be a great buying opportunity if we get that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.